Hello and welcome to Brickwork Readings, yet another knowledge session, episode 5. Today we have Mr. Kunal Sodhani. He's going to talk about the Indian currency market and the trends going around. Also, he's going to brief us about the forex market. Let me take a moment to introduce him. Mr. Kunal Sodhani is currently a part of Global Trading Center, Shinhan Bank. He's driving the whole forex team. He has a good experience of around 9 years in this FX derivatives market, which is spread across mid corporates, large corporates, and across the several regions. He is actively involved in FX sales, interbank coverages, strategy trading calls. Also on the research front, he has done fundamental and technical studies both. He has worked with a lot of banks, ICICI, IndusInd Bank, Kotak Securities. So he has a very eminent experience in OTC as well as exchange traded platform, which makes him more competent in this forex domain. Let us hear something from him. How are you seeing the foreign exchange market, and how do you see it has evolved so far in India?
Hi Ria, first of all, thank you for giving me this platform of the Brickworks greetings, and also I think it's an indeed pleasure for me, representing Shinhan Bank, which is the largest Korean bank in India, the biggest Korean bank in India. So it's an honor in both ways: one representing my bank, and obviously being on the platform of Brickworks rating. So coming back to the question, first, I think if we understand foreign exchange in very simple language, it is nothing but exchanging of one currency with the other. So like a dollar to euro or rupee to dollar, and vice versa, or any other currency pairs for that matter. Now talking about evolvement, if we just go through a brief history, in 1875 we had the gold standard, where gold itself was acted as a currency, and its value was roughly around 4.247 pounds an ounce. Later in 1944, we had the Bretton Woods Agreement, where gold convertibility was there to the US dollar, and it was to the tune of $35 per ounce. And after in 1971, this Bretton Woods Agreement ceased to exist, and modern foreign exchange system came into picture, where demand and supply could drive the currency markets, which is the current phase of the market. The best part about the foreign exchange market, it is the largest market, it is the most liquid market, it is a 24 hours market, and it is 5 day a week. If you talk about the trading volumes, if you talk about back 1980s, it was roughly around $70 billion. And now if you talk about the average daily volume, it's roughly around $6.6 trillion, which is huge. As I said, it is the most liquid market. Uh, I mean, going to where the usage of this is, it revolves anywhere to any one of us. If we talk about retail, it can be remittances to family, remittances to friends. It can be a foreign travel or tourism, which we have foreign currencies again involved. It can be any kind of education which you are pursuing abroad, again foreign currency is involved. Any kind of doctor of abroad, if you're visiting a doctor, or any specialized treatment, again foreign currency is involved. Similarly, if we talk about exporters and importers, for them, exporting and importing to different countries, FX is an important part. Any kind of foreign currency loans, any kind of ECBs which they avail, everywhere, FX has been revolving around. Even for a nation, you have to borrow, you have external commercial debt, you have various obligations and types with various nations, where FX remains a very key point to a large extent. Lastly, to conclude your question, I think it's also important that what factors, possibly majorly impact such kind of effects, is one, it can be countries, GDP, it could be interest rates, it could be the inflationary scenarios around, it could be the balance of payments, it could be current account deficit. Importantly, it can also be political stability, the government debt, and so on and so forth. So such factors, definitely affect FX to a very large extent. So yes, over to you, Rhea.
So, what do you think is the current trend of USD INR, and what role is RBI playing across?
So first of all, talking about the role of any central bank for that matter, I think any central bank has three important roles. One is price stability, one is to keep inflation under check, and third is maximum employment. So these three roles are extremely crucial. Maybe if we talk about RBI, if we talk about Fed, if we talk about Eurozone, if any central bank focuses on these three areas particularly and most importantly. Coming back to RBI, I think they have been brilliantly managing the inflows. If you see the past 3 months, the domestic equity inflows were very heavy, but somewhere RBI very tactfully managed at various levels. They were there present, which is also a reflection from the spot data. The spot intervention was very huge in the last 2 to 3 months. So if I put that into a number, I think in March we had FX reserves roughly of around $470 billion, and in just in a matter of 4 months, it has gone to $545 billion. So a very active intervention has been seen, an active management has been seen from the RBI's front. Of lately, what happened was, there was a shift from the FX intervention to the bond intervention, because the longer tenor yields like 10-year GSEC, it rallied 40 basis points very quickly. The focus of RBI, as I said, they are very active in managing the price stability portion. Maybe it is yields or maybe it is FX. So they moved their intervention towards the bonds front with their Operation Twist. Trying to flatten the yield curve, which again they successfully did it, and they got it around 6% at 10-year GSEC. So I personally feel RBI is definitely doing a brilliant job in managing their price stability scenario very well. Talking about the dollar rupee trend, I think we already had a downtrend from roughly around 75 half to 72, 75 odd levels. Currently, we are seeing a consolidation between 73.20, 74.20. This 1 rupee band has been seeing a lot of consolidation. But given the inflows again which are lined up, pressure thus may remain on the dollar in a shorter tenor. Uh, and we can see this range hovering around for some more time, and either breakouts above 74.20 on a closing basis or below 73.20 on a closing basis can decide a trend. So that is from the domestic perspective. But if we talk about dollar index, it's the most crucial juncture. It has been standing at around 94 half, 94.60. Dollar index has been hovering around, and this level can be a decider of the trend. And what we have seen in the past, that any kind of elections, like we have the upcoming elections of US, the presidential elections, usually historically we have seen dollar bullishness during the election times, irrespective of whoever the winner may be, but dollar bullishness is seen. So after a consolidation, any breakout either ways can decide a future trend. So I would suggest consolidation still continues in the interim. To cut it very short to the point, a break above 74.20 can open up doors for dollar bulls to the party. Otherwise, you will still see this consolidation happening. So we need to watch $1 index convincingly breaking 94 half and dollar rupee convincingly going above 74.20 on a closing basis.
So, can you explain us how are these current events which are there? For example, we are facing a global pandemic. How is that and other, global events which are happening between different countries? How are those events impacting, and which events are lined up first of all? And how is that impacting first the Indian currency and also the global pairs, which we are so much into imports and exports?
Correct. So, first of all, let's understand that what are the major events lined up. For on the domestic front, we have the monetary policy. Obviously, which it got postponed due to the election of the MPC, three MPC members, and thus it got postponed. But most probably, we think that it could be the next week. They may schedule their meeting. So this remains important to watch on the domestic front. One, because the supply side disruption which was happening, due to which we saw the CPI going above 6 within, and which was not in the band of the comfort zone of the RBI, can come lower now, because I feel that the food inflation and the supply disruption due to easing of the lockdowns in India, such disruption may be less now, and it can contribute to easing of the CPI also, the inflation levels also. Taking that into consideration, I feel in this policy we may not see any kind of rate impact. We personally feel it could be status quo. They will wait and watch the latest inflationary scenario, before taking a call. That is what my personal opinion is at this point in time. But in the year till March, we can see at least one rate cut more, which can be lined up. So that is one first important event domestically. On the global front, we have two important events. One is the US presidential elections, which is on November, in the first week of November. Uh, as per the polls, it has been stated that Joe Biden has been leading as against the existing US President Donald Trump. But I don't know, if we see historically, polls may not be correct. Yeah, because again, these are just polls. Even if we see an example of US presidential elections itself, in 2016, Hillary Clinton and Trump, who are competing for the presidential post, and at that point, the polls were in favor of Hillary Clinton, and roughly, if I recall, it was 3 million votes, where Hillary Clinton was leading, but that did not turn out exactly when it came to the results. So similarly, I would say polls can be just noise, which can create short-term volatility. But trusting polls may not be the right thing at this point in time. So today, again, the debate between Joe Biden and Donald Trump begins. So we have three debates lined up in the month of October. All three needs to be important to watch out. What kind of promises or what kind of establishments they're looking forward for. Third important event would be the Brexit, because we are facing the Brexit deadlines of 31st December 2020, where even the UK PM Boris Johnson has said, that by 15th of October they may come out with a firm plan itself, not even waiting for 31st of December. So this can be very crucial when it comes to dollar index again, and even euro, because of which it forms a part of dollar index, and pound. So such kind of impact, what kind of reactions can be seen? Are there any firm plans over it, or are there any discussions? So this noise before that can initially create some kind of volatility in the FX markets. Uh, but we need to find out that what is the final verdict, and exactly what are the fine print and specifications of the exit, which UK PM Boris Johnson is looking forward for. So for me, three important events. One is the RBI monetary policy. Second is the US presidential elections, and third is any kind of final verdict coming out from the Brexit front. So these three remains very important to watch, particularly to answer your levels and how it can impact currency pairs. Again, as I said, dollar index is at a very crucial juncture of 94.5. Euro has pulled back from almost 1.20 to 1.16, because again fresh lockdowns happened and the rising cases of COVID came into UK and Europe, which was a trigger point for euro and cable to fall downwards. So once we get any kind of final confirmation on the dollar index, I think that could be the decider levels.
Also, we have heard a lot many times that uh, whenever any drastic event is happening, or even when there are some communication going around between two global countries, and we get to hear that the investor sentiment, whenever they turn a bit uncertain, they just run to the safe havens. Is that the similar scenario going around even now, because we are in a pandemic and we are probably nearing the saturation level wherein we can see some good signs coming out? However, at this current moment, is that thing happening?
So I believe yes, it is happening. So impact may not be as good as initially in the past we may have seen, but yes, safe havens do. Money moves to the safe havens very quickly. So even if we see the moves recently, once as the global equities rally, when the risk on scenario comes into picture, your dollar starts weakening, uh, and your dollar yen, reacts very quickly towards it, or maybe Swiss franc reacts very quickly towards it. So such kind of events are definitely getting the market participants moving to the safe havens. But I would again say that markets are very forward looking, and they start discounting things very fast. So when the pandemic started, and now when the pandemic possibly stabling, at least in the mindset of the people, maybe not in reality or on the ground, but thus these things have been quite discounted. Now markets are looking for something else, to be a trigger. So events may change. Today we have this pandemic event, which I personally feel, the safe haven kind of demand or should not exist more, towards maybe dollar or even dollar, Swiss franc. So it did happen, but I would not say that it may happen or continue purely on the basis of pandemic in future from here.
Correct. So, any pre-COVID and post-COVID play changes have you seen in the currency, or any advice you wish to give to the investors or market participants? What should they do at this moment?
So basically, talking about pre-COVID and post-COVID, first I believe markets are very matured. We need to understand that scenarios may change. Like yesterday, we had some other major economic factors influencing the markets. Today we have pandemic, which has been moving our markets and creating uncertainty. Similarly, tomorrow we may have some other events coming up which may be unforeseen today. So events may roll up and roll around, but it depends on the market participant, how basically he manages or comes out of these uncertain times. But yes, there definitely is a difference, and can be a difference on pre-COVID and post-COVID, more from the fundamental front, because if we see, growth has stalled, uh, as major economies, domestic demands and exports have slumped, and thus this ground reality to come, which is at a slump or at a lower level, which will take some time to recover to its normalcy. So we may see a v-shaped recovery which we saw, but the stabilization of it happening to the pre-COVID levels may take some time. So talking about macroeconomic fundamentals, yes, there is definitely a difference. On the ground reality, there are many sectors, which will take a lot of time to revive from here on, which definitely can have an impact on the currency pairs as well. But one thing which we all need to understand is, if we have an active risk management policy, and if we, as a person and in terms of our behavior, if we are disciplined, not today but always, so such kind of unforeseen events will not affect you. If you see a longer term trajectory, and if your risk management and your discipline, when you try to understand your behavior with the markets, you may be able to better sync it. So my suggestion to everyone, or advice to everyone, would be that, as I said earlier, scenarios may change. It's that we need to adapt to those scenarios, and these scenarios will keep on changing every single time, every year, every moment. So risk management and discipline and understanding your behavior with the market remains the key.
Great. Kunal, I think you have explained the whole thing so nicely. We would definitely have some more such sessions wherein we can talk about the global markets, specifically on certain event or something as such. This was all about the Indian trends, majority of how RBI is playing and how the currency trends have been. So yeah, it was a very great insight hearing from you. We look forward to more such sessions. For any queries or any questions, you can write down to us on www.brickworkratings.com or investordesk@brickworkratings.com. So we will speak to Kunal and get back your queries resolved. Thank you so much.
Thank you so much, Rihan. Thank you so much, Brickwork Ratings as well. Thanks a lot.